is absolutely smoke and mirrors. Sorry, just honestly, it is just a big distraction. China is the universe's largest elephant that has ever been seen ever, sitting in a room while they're making these trade deals. I do think that it is good to have good trade relations and find new customers. And I think it's wonderful to supply US soybeans to the world. That's not what I'm saying. If you do not have China, if you're going to significantly reduce, the US exports to China, your market's going to look different. Your US soybean market's going to look different because we built up our market, 20 years ago, really just aggressively because of China and because of that booming demand. That is why we are doing things the way that we are today. And so if we're not going to have that anymore, it's just going to look different.
Hi, I'm Sarah.
And I'm Curt.
And welcome to FP Next, the award-winning podcast from your friends at Farm Progress. And boy, do we have an important discussion in store today.
That's right. With the highly anticipated release of the latest USDA report on Friday, November 14, we have an expert with us today to decode and unpack that report and give us a look ahead in what's in store for the ag economy in 2026.
Absolutely. And of course, as we're always brutally honest, Curt, right? I'm going to be brutally honest here in the beginning. One of my least favorite classes I took in undergrad was ag econ. But I think if I would have had our guest today explain this subject to me back then, I probably would have learned a lot more instead of just hanging around with my sorority sisters in the front row. But again, this is a video episode. So if you're on Spotify or Apple, head on over to our Farm Progress website or YouTube channel to see all the extra visual insights that are included today.
Yeah, I had Ag Econ 101 in college too, Sarah, but I think my best Ag Econ education was farming for 25 years because I learned exactly what you should never do because I repeated mistakes many times. We're excited to have Braun with Zaner Hedge join us today. And from her career in meteorology, storm chasing, to her time in the editorial world at Reuters, which included a stint reporting at the 2024 Olympic Games in Paris, to now where she's the chief market analyst at Zaner. Karen has such a wealth of information and insights and experiences to share with us today. So welcome, Karen, to FP Next.
Yeah, thank you guys so much for having me. There's so much to talk about, like you said, so I'm really looking forward to the conversation.
Absolutely. It'd definitely be a good one. But first off, we teased a little bit about your background. Tell us a little bit more about your story. I know I first was able to meet with you and chat a little bit at the Women in Agribusiness Summit down in Orlando this year. And there were some great visuals and some fun background that you have that maybe a lot of ag economists don't have. So tell us a little bit about how you got into ag econ.
Yeah, so I am not from a farming background. I grew up in suburban Chicago. I still live in suburban Chicago, but I have no farm background, and I studied meteorology in school. So after that, I always kind of wanted to do something that kind of marries meteorology and weather with climate, or with like equity markets, society, commodity markets, some kind of application, right? I didn't want to be on TV and I didn't want to be a forecaster or a professor. So I kind of fell into this accidentally. And I started in the agriculture market in 2012, really not knowing the first thing about anything except for weather. I knew weather, but I kind of learned a lot of the stuff that I know now. I mean, just on the job by doing it. Just like Curt said, you learn by doing. And so then after 3.5 years of being a crop analyst, I joined the editorial side at Reuters, and I was a ag columnist for almost 10 years. And so just in the summer of 25, I moved over to Zaner Ag Hedge, where I'm now the chief market analyst, and I do basically all the same stuff I did at Reuters, but now it's just kind of a more tailored offering. It's an elevated offering. It's more of that stuff that I was doing at Reuters, and gives me a little bit more freedom. And I hope that the readers, get more out of it than they were able to before. So just launched that. It's really exciting. And yeah, people should come check it out and sign up, and I can give you guys that information later if you need it.
Well, maybe all that world experience, helps you out in the ag field because it's, ag is such a global thing anyway. But Karen, before we get into the report, which everyone wants to hear about, we always ask or a lot of times, sometimes we forget, but most of the time we ask our guests, what is your favorite place to go get a burger? Now you're in Chicago. There's got to be some
Yeah.
good places that you like, but maybe it's in another part of the world. I don't know, but why don't you share that with
Oh,
us?
man. I'm actually really on a cheeseburger kick lately, but it has to be the cheeseburger, it has to be American cheese and nothing but pickle slices and maybe ketchup, but I really like the taste of cheese. So I really want to taste that cheese. I don't want the ketchup messing that up. So I'm really particular, but right now I'm eating a lot of cheeseburgers at Hugo's Frog Bar. It's kind of like with Gibson's Steakhouse. It's like a subsidiary or whatever. I did have a really good burger at a place in Western Illinois along the river. It's called the Edge a couple months ago. But then also, believe it or not, there are some really good burgers in Paris. So I like eating burgers all around the world, honestly. But lately, it's got to have that American cheese because I just love that like melty cheese taste. So good.
I
There you
definitely
go,
am
Sarah.
the same
You,
way. Yeah.
Yeah.
you have to put those on our list, Sarah.
Well, I think this is the second international one that we've gotten of food overseas. I think Svetlana had talked about being in Paris or in Rome and having a cappuccino, and I was like, we gotta go international, Curt, right?
Yeah.
There you go. That's right. Our map gets
Absolutely.
bigger.
It does, always bigger. We're expanding from the Midwest internationally now. But like you kind of mentioned, Kara, we got a big topic to talk to today. So tell us a little bit about that highly anticipated USDA report that came out today and what's it going to tell us going forward?
Yeah, obviously without the USDA report in October, we had gone 2 months, without an update to the US crops. And people were looking for, especially a lower corn yield, a little bit of a lower bean yield. And so we got that on the beans. It wasn't a really big drop from September, but, the corn yield dropped only a little bit. It was, less than a bushel from the September yield. And so I think people were maybe a little disappointed that some of those reports coming out of especially Iowa and with all the disease that maybe that intel didn't really show up here and I do want to be clear that USDA did put at the top of their report today that because of the shutdown there were some uh, U.S. agencies that may not have had complete data, but NAS, the ones that do the production forecast, that NAS is not included in that. They had everything that they needed. They said they had all their normal sources of information. So it would be the wrong take to look at those yield forecasts and say, oh, they just didn't have the information because the government was shut down. We have to take that for what it is. Now, we still have the January report, right? So another 2 months off before we, really get into the final numbers. And last year we saw a really big decline in both corn and soybean yields. So it is possible, from the November to January. Last year we saw that. So it's always possible, but I think right now we just have to look at, okay, we've got some decent crops. We have a huge corn crop. Our exports are off to such a good start, but it's really just that soybean balance sheet that is really concerning. And I think that right now the optics of the U.S. trade officials, and I mean Trump, you can just say Trump said that after the meeting in China that U.S. soybean farmers are going to prosper, we're going to restart these exports, they're going to buy tremendous amounts, and to come in and see the government say 2 weeks later that soybean exports are going to be even worse than they previously thought, the optics on that are not great. And the data for sure warrants it. And honestly, at this point, seeing the stuff that China really did bought, because we saw that today too, we saw those flash sales. And they weren't very much. I think USDA is still overstating exports just given China's, assumed involvement. So, that is going to continue to be the controversial topic because what we've been told by US officials versus what's happening in the market are two very different things.
Talking on the yield side, anecdotally, I mean, in our country, both soybean and corn yields were a little less, I think, than what people had. Of course, it's all on expectations.
Yeah.
Our expectations were pretty high. And so I think, but that's just anecdotally. So it doesn't have any data to back it up, of course. But it'll be interesting to see how that January, if there's adjustments in
Yeah.
that for sure. Talking about soybeans, you just, teed that up. Do you think how much, a lot of the planning intentions expectations and planning is going on right now for next year.
Yeah.
How much does all this soybean, pessimism, I think, or at least
Yeah.
uncertainty, play into
Yeah.
planting intentions for next year? I mean, the decisions are going to be made here in the
Yeah.
next few weeks for sure.
Well, I think it's interesting that you say pessimism because actually the market has been interpreting that quite the opposite since, middle of October. I mean, we have rallied soybeans 12% since the middle of October. Now we scaled back a little bit on Friday, but what were we rallying on? Well, this optimism that China was going to come in, buy soybeans, everything was going to be great. And even as, reports came out, hey, China's probably not buying soybeans, and then, seeing US prices rise above Brazilian ones, and then hearing that after the trade deal, China went in and bought a bunch of cargoes from Brazil. I mean, even that wasn't breaking the market. That just showed that the lack of data really doesn't allow the market to function the way that it probably needs to. And, it being so driven by headlines and, geopolitical issues and, comments just by, officials and the president and everything, it's tough to trade a market like that. So, I mean, obviously farmers got a really good rally here that probably was not fundamentally warranted. Um, I feel so uh, like sorry for them. I mean, I feel I'm stressed for them for the decisions that they're making right now, especially in North Dakota where things can just shift so much. The reliance on China has been so heavy over the years with their soybeans. Um, and I've heard a lot from farmers, saying, is this trade deal going to hold up? Because, whatever we decide to do in the spring, is China going to show up in a year and buy these soybeans? I mean, that's really the risk that you're taking right now. But I think that, seeing what has happened since, this meeting and, the deal was allegedly agreed upon, I mean, it does not look like China is rushing in to buy anything. I mean, they have record soybean stocks right now in China. Their crush margins are not good at all. They have been buying a ton of Brazilian beans, and Brazil's exports are, monthly records the last 4 or 5 months. I mean, looking at all those factors and seeing that US soybeans are more expensive than Brazilian ones, even without the tariffs. So all of those factors, I mean, it does not make economical sense for China to come in and buy these soybeans. Now, the only reason why they might is for the reserves, because the state will buy some for reserves. US soybeans store better than Brazilian ones because of the moisture differences. So they do like US beans for storage, but you don't know what their intentions are. They have not shown the interest yet. So it's just really there is a lot riding on this trade deal, and just the uncertainty is so high heading into 2026. And I really do feel for the people that are trying to sort this all out right now.
Karen, I know that was kind of our whole discussion at that conference. And I had messaged you on the little app, and I'm like, I have to talk about this because, especially our North Dakota farmers, a lot of our soybeans go out the Pacific Northwest and off to China. And, I talked with one farmer this year, and they were like, I don't know what we're going to do with our soybeans, but we have beef to carry us through. And I talked to another farmer who was like, we all planted the same amount of soybeans because we're super optimistic about our crush capabilities domestically. So it's kind of a little bit of everything. And this is kind of in case you have a crystal ball back there, what do you think it's going to look like? Kind of just summarize what China's going to do if are they going to meet their obligations they said for soybean purchases? I know you mentioned the reserves the state might buy.
Yeah.
What do you think if you had that crystal ball to your best guess?
If I had the crystal ball, they are not buying 12 million metric tons by January 1st. And if I had a crystal ball, I would say that they are not going to buy. And keep in mind that 12 million metric tons, US officials stressed to us, was the minimum. Okay, so they were trying to say, oh, but it could be better. I don't think it's going to be 12 million. And I also do not think that 25 million per year for the next 3 years is probable either. And the reason I say that is because in the last 5 years, Brazil has increased their soybean production by double the rate that China's soybean demand has increased. And so you just give it another year, and Brazil's going to be, just covering those needs. And, all you're doing right now by rallying, here in the US is you're just inviting the Brazilian farmer, continue expanding, open up a little bit more of that Cerrado, go ahead. Like, it's okay. Because they've been worrying the last couple of years too, that their profits are down, and, they're looking at the same stuff. And so But this absolutely encourages them to continue that expansion. And if they do, then I just really don't know what it looks like here in the U.S. For us. So back to your question about that, I don't think that they're going to do that just because at this point, mathematically, I don't think that works unless there's something that the market totally doesn't know about. But your guess is as good as mine on that. But I think going back to last time, we had the phase one trade deal, and it specified some things in there. And right off the bat, China says, well, at the signing ceremony, actually, which was quite amazing, they said, well, yeah, we'll agree on this, but we're only going to buy what we need. It's going to be market conditions. We're not just going to overbuy stuff. That was it. It was just dead right there. And they never met the obligations, even really came that close. So, we've seen this movie. We've seen this movie. And I hope, I would like to be wrong, just, for the sake of just, U.S. agriculture. But I also just think that it is never, ever going to be long-term bullish to force China to buy our stuff. That's just not bullish. That's not how markets work. It's just that's not a good thing. That's not a good route to go down.
Well, and as we've talked on our podcast before, China has always been a tough customer, even though they've been a huge purchaser of soybeans over the years. They've always been a tough customer as far as complaining about foreign matter in our soybeans, or complaining about protein levels, that we couldn't raise beans that were at the levels that they wanted. And, there's always something, it seems like. So there have been trade barriers long before a trade war, I think, with China. Yeah. And that makes it important for all these new potential, trade agreements with Central America, with some of the other Southeast Asia countries, certainly. So how do you think the tariffs kind of play out? Are there new agreements on the horizon that are going to make a difference? And where is the great potential, for our next great exporter of, we're talking about soybeans, but we could talk about any grain, I guess.
Yeah, I think actually, if you talk about like a really big potential market, I'll say it's India. Look, they have the biggest population. There is, potential room for growth there. Whenever you've got the most populated country in the world, a lot of mouths to feed, there's always some potential there. There are some, current barriers in place just with, the way that they, have written their laws, and, there need to be some things changed, but, it's always a possibility. But when you talk about the trade deals that we've been making, with soybeans, with, other nations, Central America, some Asian countries, no, it is absolutely smoke and mirrors. Sorry, just honestly, it is just a big distraction. Like, China is the universe's largest elephant that has ever been seen ever, sitting in a room while they're making these trade deals. It's like, it just, and that's fine. And look, like, I do think that it is good to have good trade relations and find new customers. And I think it's wonderful to supply U.S. soybeans to the world. That's not what I'm saying. What I'm saying, though, is that if you do not have China, if you're going to significantly reduce, the U.S. exports to China, your market's going to look different. Your U.S. soybean market's going to look different, because we built up our market, 20 years ago, really just aggressively, because of China and because of that booming demand. That is why we are doing things the way that we are today. And so if we're not going to have that anymore, it's just going to look different. How? I'm not sure. We're not going to need as many acres, or we're just going to have to find new uses. Now, we've been expanding crush, and that's also great. But you're not going to do it at the rate. You're not going to solve that by 2026, right? By the time the farmer's needing to plant in 2026. So, that is also a multi-year thing, which also depends on legislation, which we know is always a dicey thing. That is always so unknown. It's been going on for 4 years now, so maybe more. And there's a lot of unknowns there too. So I just think that we have to be aware of what we're getting into, and, just going forward, it just might look different.
Absolutely. And Curt, I know I had visited with you for an article in Dakota Farmer, which ran, of course, in Nebraska and Minnesota and some other places in the Midwest, talking about what's going to be happening with soybeans, if farmers are going to move away from soybeans. I'll make sure I link that in the episode description so we can talk something a little bit more market focused than just the soybean markets, even though that is such an important topic. But I want to talk a little bit about corn. And so when we were having our discussion, we talked about how a lot of other states in the US, except for North Dakota, drastically reduced their soybean acres and
Yeah.
probably switch that to corn. Do you think that's going to be a trend that continues into this next year?
Well, I talked to all of my crop watch farmers. So I have a thing called Crop Watch, and it's been going on 8 years now. And I've got 11 farmers all over the country. And then weekly, I talk to them and ask them, how their crops are doing. But I just this week wrote a kind of a 25 wrap-up piece. What did farmers tell me about 26? And I mean, every single one of them is worried about the costs. But also, most of them are saying corn still pencils out. Now, if you remember last year, what we were talking about at this time, it was like, you know, corn is definitely a lot more attractive than soybeans, but corn isn't exactly attractive. That's the key. And I think that we're in the same boat now. But that last year turned into 99 million acres of corn. So, I mean, we still somehow got an 89-year high in corn acres, despite it not being, attractive. It was just that much better than beans. Now, um, I think it's kind of looking similar. I mean, I don't think soybeans are looking that great. It may not be as bad as it was last year, just corn relative to beans. But I do think with all of the trade uncertainties and how volatile that's been, I know that people should not hinge on that necessarily. So I do think, they told me that they're going to stick with rotations basically and my North Dakota person said that wheat looks absolutely horrific, like just just will not be planting wheat. If anything, would switch wheat to corn. So, so we could see maybe more corn acres up north. And I know they had a decent crop in North Dakota this year with the corn. So, there is reason to be optimistic about that because I know, farmers really everywhere just feel better about their ability to grow corn versus soybeans, just in terms of controlling the yields, because the beans just rely so heavily on those August rains. And if you don't get them, you're just out of luck no matter what you've done all year.
Plus, it seems like we continue to, not that corn is exempt from that, but we continue to have, white mold issues, SDS issues
For
with
sure.
soybeans. And, this year, a lot of folks in our country on dryland beans had better yields on the hills than they did down the bottoms because of,
Yeah,
the conditions were just there. And so
right.
that is always a concern with soybeans.
Absolutely.
But let's talk a little bit about, the rising input costs and how that impacts, the other side of things. I mean, if you're a livestock producer, you're glad for cheap corn and soybeans because that helps your bottom line, and you've got some pretty good prices to look at right here. But what is the forecast on the input cost side going into 2026?
It's really disappointing that the government didn't open sooner because we were supposed to get the updated cost of production forecasts yesterday. They were last updated in June. So I was really looking forward to seeing those. But right now, actually, the last that they estimated it for 26 was rising just a little bit from 25. But obviously, when you look at, 25, say, versus 21, I mean, the cost of production on corn and soybeans is up, 20% in 4 years. But if you look at futures prices over those 4 years, they're averaging, 17 to 20% lower. And so that's why people are not happy that the inputs have not come down with the prices. And they never do. They never do after these cycles, so it's just kind of an adjustment period. Um, but no, I think that we're probably going to see some higher costs now. I think that and fertilizer was the number one thing that people told me because there were some people were optimistic that maybe interest rates could fall, that maybe some of the other inputs, maybe rents would be steady. So maybe not everything's going to be super expensive. And if we can figure out some of these tariff things with other countries, maybe some of those chemicals that we need, won't be as high. But look, I think farmers are facing another year where it's just going to be expensive to farm, and prices just are not great right now. Anything can happen with prices. Obviously, we don't know that, but looking at it right now, yeah, it's going to be another year to it'll be slim to make it work, but good yields can definitely get you there, and that's what we'll really be hoping for in 26.
I feel like just kind of the whole point of all these conversations really just keeps coming back to everyone is certain about one thing, and that's that we're all uncertain of what's going to happen, and just that uncertainty of,
That is
you
for
know,
sure.
everyone, we all need that crystal ball. It's our favorite joke we always make here on our podcast.
It's
Um,
like my dad used to say, you always have to tighten your belt, and it's kind of a common thing around farmers, and they know what that means exactly.
Yeah,
So it seems like we have to do that more often than not, but that's just the way
for
it goes.
sure.
Absolutely. And I know we do have to say with our next question we have, thank you to Michael in Nebraska for sharing a few of his questions with us. Again, if you want to send in your questions, maybe you can have the experts answer them. But his question was, how do you think the proposed government payments to farmers, might they lead to higher land or input costs, or how might those government payments help farmers during the trade war?
I mean, we obviously have yet to see the details of that, but I think ultimately, look, like farmers just want their market to work. They don't want to be paid off because they know that it does distort markets. It ultimately just kind of, it just kind of throws off your balance sheet a little bit, right? But I think that when you pump more money into the economy, in this case, the farm economy, that can be inflationary, right? And so I think you have to remember that. And I don't. And again, I don't really know what they're going to do with these payments or when they're going to tell us. Um, but if it's anything like last time, it was, what was it, like 45 billion dollars? I can't remember, like the MFP payments from 2019, but it was substantial when you look at the percentage of the farm income, or the net farm income that was. So and that's really important for producers, right? Because the bills are really high. Not everyone uh, joined in on the good yield party. I know that some people did have some problems, and people are really just trying to pay bills. So I think it does help, but again, when you inject money into something that is inflationary, and so I don't think that's going to really do what anything for the trend that we've been seeing of just increasing costs.
I know I visited with one farmer in North Dakota, and I think they said it pretty well. She had said, "We don't really want government payments. We just want somebody to buy our crop." Like at the end of
Yeah,
the day, I think that's what a lot of farmers might
right.
have very similar thoughts of. Like you said, they don't want the
Yeah,
inflationary payments. They
yeah.
want their crop to get sold somewhere.
Yeah. And I think a lot of it too is that, like some of the idea behind the payments is that, for the bankers, suppliers and stuff, because they also have to get paid, and, it's not just the farmer, like this trickles through the whole farm economy. So I think it's kind of looked at an injection into the entire farm economy itself. But again, just my point of it being maybe not immediately, but down the road inflationary, I think that is the biggest risk, depending on what the payment sizes are, what it looks like.
So you talked about how money trickles down into the communities too. A lot of these small towns like my own rely heavily on the farm economy, and so you can kind of tell when things are good and when things are bad. Talk about when things are good. Let's talk about beef. Let's talk about a little bit about the livestock markets. We reported one of our sale barns in the Sandhills in Nebraska had numerous national records for feeder calf prices this
Yeah,
summer. I mean, it was just incredible. And then I was just reading the other day, how in spite of the cost in the grocery store of beef, demand remains strong. So,
yeah.
I mean, it has just really been on fire. So, are we going to continue to see that down the road here?
Yeah, I think that the explosion in feeder cattle is good and bad, right? Because I mean, with the higher the replacement cost, the higher risks that producers have to assume. I mean, it creates a lot of risk, as we know. So I think that this is another market where kind of the government intervention just throws so many unknowns into it, because it was a month ago that Trump, I think he just posted on True Social, hey, it looks like beef is too expensive. We're going to do something about that, right? And it's been a downhill slide since then. I mean, for really, all livestock in general, just, because of that. And so it it introduces so much uncertainty. And, we know, being in this industry, that bringing in, beef imports, like Trump proposed doesn't really fix the problem, because we've seen really huge beef imports in 25 and we're still, on this track. So, we know that's not the solution. It is a multi-year process to kind of restart the herd and, get it growing again. And, the Mexican border thing is definitely an issue right now. And I know that they are still finding screwworm cases, and USDA for keeping it closed despite the pressure. And I know just this week they opened some sterile fly facility down there to try to combat things. So I mean, hopefully that changes. But for now, it just we've got to keep that out of our herd, right? And so I think that to your point about the demand being so good, I mean, that has been really the story for the last year, right? Is that beef demand has been so good. But I think that there is potentially some concerns about demand in general, with just like kind of the possible break in equity markets kind of going forward here. And, that maybe that just kind of, just demand in general scales back, and maybe consumers are a little bit tighter with spending. So I think that is a potential risk going forward. The other factor here is that the last report that we got from the CFTC showing the commitments of traders' positions was that, I mean, especially in the hogs, funds were record long hogs, the last data point that we have. So, I mean, there was room to the downside there. It was building, and the same in the cattle. So, anytime you get in that position, you're going to see, a downturn, especially if you have the president saying, oh, the price of your product needs to come down like that, and especially if you're a speculator and you hear him say, like, we are going to bring down this price. Well, okay, that's the only, thing you need to be told. So I think, yeah, like that's another market that's just going to be, it's going to be a little bit of a victim to the rhetoric that we see here. But ultimately, we know that the fixes that they're proposing they're more of a longer term thing. They're not going to fix anything in the immediate term. So we know the cycle is multi-year. So I don't really know about. I wish we had that commitment of traders data. That would really help us to really kind of gauge where things are. But yeah, I hate to just like say more uncertainty, but here we are.
It's a story
It's
of
okay.
2025.
The cattlemen are used to it. They're used to
I
it.
know. Yeah.
Seems like.
Well, the interesting thing is that I did a report on this a couple of months ago. Is that when you look at the net farm income over the last year, or I'm sorry, no, since the beginning of time, really. Okay, so this is like, I don't know. I think my chart goes back to maybe like 60s or 50s, just because it's so interesting. But when you look at the difference between cash crop receipts and like livestock receipts, basically in 2024 and 2025 was the first year since the 70s that the livestock was making more than the crops. That's a really big shift. It's quite notable. Now, obviously from like mid 70s and earlier, it was, livestock dominated. I don't know how long that goes on. Livestock producers have been waiting 50 years for their moment, and here they are. I hope they're, taking advantage of it. But I think that's a really interesting trend to point out, is that, that net farm income that you see, those numbers that USDA puts out, a few times a year, really heavily driven by the livestock sector this year, which is not normal.
It's just all these like you said, uncertain things, and these like records, and like so many things are just going on. It's like you kind of have to like look back at it, and I look at our farm futures and I'm like, thank God for the economists, because I'm like, where do you even start if you're a producer looking at all this? But as we're wrapping up, we got one final question for you of give us your final take on what predictions might be for the 2026 outlook from all your insights and data you've collected.
Yeah, I think, I've kind of been summing it up as we go. We're going to be in this kind of somewhat rhetoric-driven markets, and we just have to pay attention to those headlines, because and we have to know which ones to pay attention to, which ones the markets are going to want to see, which ones they're going to dismiss. I mean, and that always, it's a tough element. I mean, we did it back in 2018, 19, 20. We were doing this, and here we are doing it again. And so, I just think being vigilant to that, and knowing that, despite everyone's best fundamental calculations or analyses or technical analyses, You can just wake up and find that someone has said something unsavory and the market is tanking, or opposite, right? So I would say we just got to be vigilant and staying in tune, and just knowing what works for you, knowing, where you're at, what your costs are. I think just being down to earth, and I think understanding, markets outside the US, and understanding just how global the ag markets are these days. Just understanding everything going on, especially in South America, as we kind of start of their growing season. There is a La Nina going on right now, and that's traditionally not that great for Argentina and southern Brazil. So we will see, what happens there. But it's, I don't know. I think 2026 will be another year of U.S. corn, is king. And if I can leave with one good thing, I think that we produce such a huge crop here in the US this year. And I know that does weigh on, while that does weigh on prices to some extent, it is good in terms of the export market because we are remaining dominant. Brazil overtook us one time 3 years ago, but now we are, very much, back in the number one position. And I actually think staying competitive on the global market is a really big positive for U.S. corn. So, producing a ton of corn in 26 in the U.S. may not be a bad thing.
Absolutely. Well, we know, Karen, thank you again for joining us today. I know it's in a busy day, kind of a busy time in agriculture with all those reports.
Definitely.
And of course, if you want to get all of Karen's great insights, we'll link her newsletter links and Zaner Ag Hedge in the episode description. You guys can sign up there. And otherwise, we're going to wrap up this episode of FP Next. So, Curt, I think we would talk about markets for a lot longer than we probably have time for today.
Oh, and I love hearing corn is king. I'm in the Cornhusker state, so we love corn here, so that's okay with me.
And I'm wearing red for the Cornhuskers.
I know,
thank you. Not a Cornhusker, but I'm supporting the team. So
yeah,
there you go. And to our listeners, we want to thank you, and we also want to hear from you. So drop Sarah and I a line in the links below. We love to hear from our listeners about anything and everything, but especially if you would have some comments on the farm income outlook, or maybe some follow-up questions for Karen. We'd just love to hear that.
Absolutely. Everybody heard our one listener who had wrote in and got his questions on the podcast. So maybe next time, if you write in, your questions will be next. Don't forget to follow along with us to find out what's next in agriculture and get all of the best farm and ranch insights from Farm Progress, and check out the digital edition of your regional publication at farmprogress.com.
And a special thank you, as always, goes out to our sales, digital marketing team members and production team members who put in a lot of work with us. And if you want to be sure not to miss any of the latest ag stories, be sure to sign up for our Farm Progress Text Blast.
And on top of sharing your thoughts and questions on today's episode, we'd love to have you leave us a review on your favorite listening platform, or if on YouTube, leave us a comment with any of those questions you have for our guests. And yes, we do ask for these reviews every episode, Curt, but those reviews and comments really help others in the ag industry find us and help grow our community more and more.
And we're always excited to hear from our readers or listeners, and I know we'll have a special announcement. Hint, hint, hint. So listen up in just a few episodes, and we're really excited to share this all with you, but we can't right now, so you'll have to follow through and listen in.
Got to keep it under wraps for a little bit longer. But remember, if it's agriculture, your friends at Farm Progress have you covered. Here's wishing you high yields and good weather. We'll see you next time.